I tend to be a believer that AI has the potential to actually lower the cost of goods and services production and therefore increase also the demand. There's a potential world, though it's certainly not guaranteed, where we find ways to use more human potential and employ more people because each person is made more productive by AI.
Howie, I'm so excited for this, man. I always love our chat. So thank you so much for joining me today.
Yeah, it's great to be with you.
I always love to start with founding stories, but I wanted to do something a bit different today. I wanted to start with, if you could call yourself up the night before you started Airtable and gave yourself a piece of advice, what would you tell yourself?
The thing about advice is it's always 2020 in hindsight. So there's a million little things that I would tell myself. But I think the biggest one is, it's really important to think not just about product market fit. Every first time founder is concerned about product market fit. And there's this adage that a second time founder thinks about distribution. My take on it is a little bit more nuanced, which is it's still product market fit, but it's about figuring out the right product strategy that marries with an effective go-to-market model that lends well to that product, right? So certain products work well in a bottoms-up, viral, organically adopted way. Certain products are single user versus team-centric. Accordingly, I think you need to design a go-to-market model, whether it's outbound sales or performance marketing or organic and viral growth, that really pairs well with that particular product dynamic. In hindsight, we didn't think enough about go-to-market model in the early days of the company. We just focused on building a good product, and happily and luckily, that was good enough to get us to the next phase where we did start thinking about go-to-market. But I think it's something that we could have thought about a lot more.
If you had have thought about it a lot more, what would you have done differently? Because to the outside world, it seems like a perfectly executed PLG strategy. What would you have done differently had you had have thought about it?
I think one of the differences was, we built the product with the ability to become team-centric. So we built, we spent a lot of time engineering the back end to be real-time collaborative in nature, which was not a small technical feat. We thought about the team-centric use cases. And when we started putting out templates, this was a little after we launched. Initially, we built some templates that were more solo user-centric, some that were more team-centric. In hindsight, I wish we had put even more emphasis on the team scale use cases, and especially those use cases that involve larger teams, right? I think we got to those sort of organically, but it was a little bit more diffuse. So early on, we got a very large range of different adoption. And I wish we had guided our adoption more and earlier towards the team-centric use cases, with the anticipation that those would be the ones that A, monetize better, B, lend to more more go-to-market models, right? If you're taking a single user product out to market, it's just harder to make performance marketing work. It's harder to make, you can't really make outbound sales work, right? The economics of, pitching a single user who pays a single and relatively small dollar cost to you is just hard. So I think being more committed to, from the earliest days, the team-centric use cases and even larger teams would have lent better to early on a pairing of more aggressive go-to-market models.
We're going to move into the topics that we originally planned, but I do just have to ask this. As a VC, people actually come to me for advice, which is bizarre and fucked up in so many ways. But my question is, I have so many PLG founders who say, we have a horizontal product, similar in the way that Airtable is, so many different use cases. Should we go for 2 or 3 verticals and product market aggressively towards them? Or should we let 1,000 flowers bloom and just let the world try our products and be much more horizontal? What advice would you have for those founders? Because I never know the answer.
I don't think it's for lack of good thinking from you. I think it's a genuinely tricky question. There's nuances, right? Some horizontal products are actually, a vertical of their own, right? When I think about, a Slack or a Dropbox, I think they actually fall into a very well-defined category in my mind. Like, what you're going to use Slack for, what you're going to use Dropbox for. So even though they're not function or industry specific, they kind of occupy a well-defined category of their own, right? You're going to do chat and communication on Slack. You're going to do file sharing on Dropbox. I think for other products where the use cases are not as self-evident, the importance of verticalization, especially early on, is more important. It's kind of the crossing the chasm versus inside the tornado metaphor, where early on, I think, especially when the market is still trying to figure out what is this thing, it's helpful to really go deeper into a few different use cases and make sure you fully solve those, while at the same time preserving the optionality in the long term, not overcommitting the platform or the product roadmap in such a way where, you're so brittle, you're so hard coded for those narrow use cases that you can't expand outward. So I think these are pithy statements that are easy to speculate on in the abstract. But when you get really specific in terms of what is the use case, what are the functions, what is the product roadmap one way or the other, and the go-to-market model, I think that's where it gets really interesting.
Speaking of it getting really interesting, we first kind of reconnected and decided to do this next discussion because of a tweet that I did on AI and essentially how it's integrated into enterprise. I want to start with kind of a thread, so to speak, and it's why are advancements in AI as significant as the introduction of cloud computing? Mike, over to you.
Yeah, I mean, I would even venture to say they're different, but potentially going to be more profound. And I think the reason for that is, the benefits of cloud compute are pretty easily grokkable, right? You don't have to manage your own servers. There's infinite scalability. As hardware costs go down, you kind of instantly realize the benefits of that, right? Like we just pay our AWS bill every month, and over time, over the long term, you get more compute, more scalability for cheaper, right? And you get more and more resources that are provided that solve a lot of not just, physical headaches with managing your own servers, but even software headaches increasingly, right? They give you architecture out of the box. So by all means, there's a lot of power and value to the cloud compute model. I think AI, while still in its infancy, and especially LLMs, are going to be profound in a very different way, which is, when you think about the broad range of knowledge work that's done today, every function, right? Whether it's legal or finance or even the more creative functions, marketing, et cetera, you can just see the glimmers starting to emerge of how a really, really broad set of work can be automated or accelerated with AI, with especially Gen AI. I think we've probably all spent way too many hours playing around on Midjourney with fun prompts and just being kind of having our minds blown with what AI is capable of. I mean, it's seemingly creative, right? Like now, whether you actually believe, you're willing to ascribe it the word creative or not, I think objectively it is able to produce useful output, right? And it's easy to squint and imagine as the capabilities of these models only get better and better, that's gonna increase. So they come back to the question. It's really about the breadth and the depth of value that can be created with Gen AI. And if you believe that we're just at the beginning of this curve of not only adoption, but technological improvement, right? I mean, cloud in a sense, while there were improvements to what you get from the cloud, the cheapness of it, the scalability, et cetera, to me, it felt like more of a binary shift, right? Like you go from on-prem to cloud and you realize a lot of those benefits from that switch. I think with Gen AI, we're going to see more and more use cases get powered by AI, right? And it's going to attack all these different functions, industries, et cetera, piece by piece. And so the total amount of disruption in that is, I think, just a lot bigger.
So if we think about piece by piece in enterprise, you speak to some of the biggest enterprise leaders in the world. What are the commonalities, I guess, in what enterprises want to achieve through the implementation of AI and Gen AI, do you think? What are those commonalities?
For sure. So I think it's super early. I mean, I've spent a lot of time talking to the C-suite, Fortune 500s about AI, and Airtable has some AI capabilities that we're excited to get into the hands of both enterprise and self-serve customers. Admittedly, I think one thing I've learned is just that it's super early. I think a lot of customers are still trying to figure out what you can do with AI. So to some extent, I think we're still limited by the broader understanding of what Gen AI is capable of, what its affordances are. So, what are its limitations? Obviously, there's, hallucinations and accuracy issues that are a major challenge, right? When you're trying to, implement a use case that requires a high degree of accuracy. For instance, if you want to use a retrievals use case where you're able to ask, a smart AI bot questions about whether it's HR benefits or, wealth management information, these are things where you want to have it be right. You want to have it cite the sources, and you want it to give you a good answer too. There's all these limitations for sure. And there's also just we're still in the education phase where I think every enterprise is getting savvy as we speak, or trying to get savvy as we speak, in terms of what is an LLM, what are these basic primitives, right? I'm hearing the words even vector database and other kind of technical concepts be talked about in the enterprise. And to me, that's really exciting, because I think once there is this baseline level of understanding of what exactly this technology is and what's capable of, I think that's when the real fun will begin, where we'll see enterprises actually get really smart about applying this powerful technology to specific problems that they have.
So I'm in Europe, Howie, and we were chatting about kind of how shows have changed over time and how I've changed over time. I'm much more honest. We're still like decades behind a lot of US enterprises, and people are going to kill me for this, but I don't care. But like, we don't have Slack in a lot of large enterprises. Like, I have friends who are CEOs of 50 to 500 person companies. They don't know what Slack is, let alone Airtable. And then if Gen AI and AI is the next one, my question to you is like, how far away do you actually think we are? And is this tech bros getting a little bit excited too soon?
One difference between Gen AI and a traditional enterprise tech is that Gen AI is not going to be confined to just enterprise deployments, right? In fact, the way that we've all become aware of and it's become top of mind is through the consumer applications, whether it's ChatGPT, Midjourney. These products have gotten real scale, right? I mean, compared to any consumer product like Instagram or Twitter, et cetera. The growth curves, as we all know, are pretty profound. And I think, to me, one of the interesting things has been how broadly, Gen AI has touched consumers. So it's not just the, Silicon Valley elites who are adopting this product, but, I've come across, just really surprising, kind of friends, family, people that you wouldn't otherwise think of as super early adopters, especially of AI, finding interesting applications of AI, right? I have a friend who has a dad who's a lawyer, and not in tech law, actually, just in kind of traditional, kind of personal law, and not on the West Coast either. And yet, this dad has gotten really into using ChatGPT to help with kind of triaging legal cases, doing research, et cetera. It's been really impressive to me. And I think a real testament to the nature of AI, which is, by default, it's a much more accessible technology, right? Gen AI especially, the whole idea is that you don't have to have technical domain expertise to go and build or train your own model. It just kind of works out of the box, right? Sometimes it's wrong, but it's helpful.
I'm just rolling with this one. It's the end of the day and it's Monday, so fuck it. Employees don't want it. I'm invested in several companies where I speak to the CEOs and I'm like, hey, are we using X? Are we using Y? The teams are pushing back.
On what basis? Because I've heard all kinds of different, perspectives on this from employees, including our own.
Media companies to gaming houses, where asset creation, where content creation, where graphic creation, they're getting rid of 90% of the team over time and replacing them with these tools. And the teams know this is a gradual transition.
Yeah.
What happens when the employees don't adopt because they know this is a transition? It's almost like the screenwriters right now.
I think we have to, get very, solemn and serious about the very real economic implications of AI, right? And again, we're still super early. People are worried about the eventual super intelligence capabilities of AI and what that could mean for humanity, and that's a very valid and real concern. But I think even nearer term than that are the economic and disruptive implications, right? What happens if AI, in a much faster way than any other disruptive technology in the past, kind of changes the job landscape, right? I tend to be a believer that AI has the potential to actually lower the cost of goods and services production and therefore increase also the demand, right? Like we can just produce more and better products. And I think while it allows us to leverage labor productivity goes up, there's a potential world, though it's certainly not guaranteed, where we find ways to actually use more human potential and employ more people because each person is made more productive by AI, right? I mean, all analogies are quite crude since nothing is quite the same as AI. But if you think about the advent of personal computers, of course, it completely disrupted some traditional knowledge work, right, or work in general, filing papers in cabinets, like basic information retrieval and manipulation and document editing in a typewriter format. All of that obviously went out of out the window. Fast forward a couple decades, and I think there's more gainful employment than ever, right? That's arguably enabled by the productivity enhancing capabilities of computing. So I think we're in this weird transition phase where everything can the risk is that everything happens very quickly before we as a society know how to kind of adapt. But I do think there is potential, for every person to figure out how to augment their capabilities and ultimately become more productive and even more valuable because of this human and AI symbiosis.
For those that are educated in enterprise and those that are aware, what are the biggest reasons for them not to adopt? What are the biggest implementation challenges that they face? Why are they not adopting it if they're post-education phase?
We're candidly still very much in the education phase. And I would say, the first half of that journey, keep in mind that this technology is so new in the awareness of the mainstream, or if you don't think we're the mainstream, then even in the the minds of, let's say, enterprise decision makers, right? I think everybody kind of had this wake up call roughly a year ago, and just the buzz around Gen AI's capabilities. And I'd like to think it's not just because of an accidental excitement that built up because of the consumer facing products, but also because the capabilities of the newest models just got really good. I mean, if you look at GPT-4's performance versus GPT-3, for instance, in pretty profound ways, it's actually able to do things like, pass the bar, pass job interviews, solve problems that, previous generations of models just did not do well enough, right, to be useful. The technology has actually reached this breakthrough point, and we've only really had less than a year as a world, and especially within enterprises, to keep up and figure out what is this thing that even now public market investors are pricing into our stock, based on whether we're going to be an AI winner or loser. And that's not just for tech companies. It's of course even for traditional companies, right? If you're a retailer, the ability to gain OpEx margin is driven by your ability or the perceived ability to implement AI and improve the leverage of your business. So I think first we are very squarely in the early innings of even that education phase. That being said, I think some of the other bottlenecks are going to be around data privacy and whether enterprises are comfortable trusting these cloud-hosted providers. OpenAI, for instance, has an amazing model offering, but right now they don't have a way for you to deploy in a self-hosted way inside your own infrastructure if that's something that you care about, right? And of course, there are going to be open source models that help bridge that gap. You're going to be able to adopt your own models that are pre-trained. There's going to be challenges around, what is the nature of the training data? Is there copyrighted content on which this model is trained? Does it have the risk of plagiarizing content? Especially if you're producing content that's going to be public facing as opposed to just inward facing. And ultimately, how do you get the accuracy and the safety of these models high enough to be useful for the intended application?
I totally agree with you and get you on all of those challenges. I think a lot of it also comes down to kind of hand-holding for the enterprise.
For sure.
And I think they want it. And despite what you said there about those challenges, they might try it. And we kind of chatted because I put a tweet out saying the biggest companies built in AI will actually be services companies helping integrate AI into large enterprises. Do you agree with that statement that services companies helping integrate AI into large enterprises will be some of the biggest winners of the next few years?
I think services companies will definitely play a very important role. For how long and how much of the cake they take versus application companies, your guess is as good as mine. But I think especially in these early innings, the services companies are going to be the handholders, right? They're going to help these enterprises both with the technical know-how of, for instance, how do you implement a vector database? What's the right embeddings model to use? How do you chunk your content appropriately for the intended use case? How do you do citations? Like, these are all technical implementation details that actually matter a lot, right, to getting a useful solution. And short of having a SI come in and help you build it, or having a really, really robust platform or solution that comes out of the box with all of these capabilities, which, candidly, I don't think exists yet. I think enterprises are going to need some help, figuring this out. Otherwise, I've seen some, go off and do this themselves, and it's possible, but it's also a lot of heavy lift, right? It's a very uphill journey to go and gain the internal technical expertise, to do this.
Can I ask you, when we think about enterprise and startup or smaller company, I think it comes in like two different lenses.
Yeah.
One is in the providers of AI themselves, incumbent versus startups, and then the other is in terms of actually normal company world, big toy company, startup toy company, as an example. If we start in the traditional tech world, who wins? Who does AI favor more? Does it favor Adobe, or does it favor the next generation creative cloud company? Does it favor Airtable, or the AI first Airtable from 2 months ago in YC?
One thought I have is it grows the entire pie. When you think about Microsoft's Copilot offering, it's going to add significant ARPU to every single seat of Office, which is a massive install base, right? So it's actually growing the pie of dollars because it's creating new economic value in the world, right? So we're actually expanding GDP by enabling people to be more productive and creating a new market. First, I don't think it has to be purely a winner takes all, Adobe wins and Canva loses type of equation, right? I think AI could actually enable both Adobe and Canva to grow and to actually create disruptive experiences that both deepen the value prop. I mean, generative still, for instance, in Adobe is amazing, right? It's amazing for existing Photoshop users in a way that I think, I personally would be willing to pay a lot more money for. So probably, lots of monetization upside there. Some of the AI capabilities are also going to be amazing from the standpoint of creating disruptive capabilities that open these products up to new user bases, right? And even new use cases. And I think that's where, potentially the startups or the newer companies that have more ability to lean into the tech and kind of build products without the need to support existing customer expectations, distribution models, et cetera. When you think about products like, Gamma or Tome, for instance, disrupting, how you create slides, I think there is a possibility that, while Google Slides and Microsoft PowerPoint are for sure going to implement Gen AI capabilities into their own products, that, these new upstarts implement them in a way that actually goes after novel use cases. They're not competing for existing PowerPoint use cases, but they're actually going after completely new ways of sharing, expressing information that arguably are not even really about slides, right? So much as a better way to communicate visually. I kind of think of it like Prezi, which I never personally liked that much as a product because it always made me dizzy, the flying around the screen. But what they were doing was not going after traditional PowerPoints, but rather creating a new and an arguably improved way of communicating content in an engaging way.
Can I ask, in this situation, you'd be considered the incumbent, if we're being blunt. Are you able to move as fast as startups are? Everyone always says with incumbents, well, they can't move as fast. They have the distribution, but they don't have the speed. When we look at Adobe speed of execution, Google in many ways speed of execution, for you as Airtable state, do you think you can move as fast as startups can?
Yeah. So the short answer is yes. And I think it's sometimes a rational choice that every company, and I think it's really a gradient. It's a spectrum of how much of an incumbent versus an upstart you are. And, like in all spirit of humility, I would put us very much still on the upstart side of the equation. I think any company sub 1 billion in revenue is an upstart compared to the enterprise type, whether you're Salesforce or ServiceNow or obviously, the big FANG companies. We're just still operating at a much smaller, leaner scale than those companies. So I like to think, first of all, that we do have a higher pace of execution velocity than a very, very large company. But I also think, within Airtable, there is this conscious choice that we always have to make of, we still have a finite number of resources, right? We may have raised over $1 billion in capital. We may have, many more employees than we did when we started the company at 2 and then 3 and then, 5 people. But there's always resource scarcity. And so I think it's always this question of, okay, we could go and put, 10 people, let's say, on a completely new Skunkworks project that's building literally a separate product, separate code base. We could build something new from scratch and then cross-pollinate that into our existing customer base, right? And, it's a viable model. Some companies have done it. Or we can go and think about how to build functionality that is incremental to our existing product, but still adds or changes the value prop of Airtable to our existing customer base, and maybe even unlock our ability to sell into or get adoption from new customers. It still creates disruptive value. So I think it's ultimately a choice of, if we wanted to cut corners, launch something completely separate and new, we could move really, really fast. I mean, maybe some startups are able to take even more aggressive shortcuts, like, not having to worry about security as much, right? Or stability, SLAs, et cetera. Like we would have to have a certain minimum level of expectation that we can guarantee to our customers around those things, which, ultimately is valuable, I think, for us. Though it does slow us down versus, a truly, cavalier new startup. But I think, when we're building stuff into the existing product, for the existing customer base, I think it necessarily is a little bit slower than building it, as a clean slate, cut all corners, new product entirely. But you gain the advantages, of course, of compounding the value that you already have. So I think it's always a choice.
Howie, I had Emad at Stability on the show a while ago, and he said that enterprise will adopt AI next year, and when they do, it will be a freaking train. If we break that up into 2 separate parts, do you agree that enterprises will adopt AI en masse next year? And how do you think about that timing?
Personally, I don't know if there's anything particularly special about next year. I mean, I think every month that goes by, enterprises are getting more savvy about AI. I'm seeing it in my conversations with enterprises, today versus 3 or 6 months ago. There is this constant and kind of rapid progression of savviness, right? Understanding, what are the types of use cases that we as an enterprise should deploy AI into first? Lower stakes, higher upside, easier to get, some product into our workforce's hands and start experimenting with. I see this as more of a, kind of a agile or an iterative approach to productization, right? Whether that productization is done by the enterprise themselves or with the help of an SI, or by startups or existing software vendors that are going to provide AI-powered solutions into the hands of the enterprise. To me, it's a feedback loop, and as we go and see what works in the enterprise, and Airtable is definitely leaning very much into this mentality. We don't think we can predict exactly what the killer use cases are going to be. I mean, there are some known use cases that are going to be valuable, but we think it's too early to really know everything that's going to happen with AI and what are all the big use cases. And so I think it has to be this, this dance where, we're going to put out product value, in the form of both basic building blocks of AI. So AI Field is one example in Airtable where you can compose a workflow using AI as easily as you could just add a new column, right? And then you can, change the output of that into an automation or put it into an interface. That's a very flexible and powerful primitive among, many other future primitives that we're going to build. But we're also coming into enterprises and, spending time figuring out what are this few starting point use cases, right? In marketing or let's say product management, that are great entry points for an enterprise to start using AI, right? What does that look like if an enterprise wants to, start by trying to use AI in a product workflow, to synthesize insights from customer feedback, to generate new PRD ideas, right? To summarize execution progress, right? What does that look like? And can we lead with a vision of a product value and then test the market and get feedback as customers actually start adopting, the solutions with AI, and then we learn from there and expand. So I think it has to be much more iterative over the coming months.
What are the hardest things about the transition to enterprise, Howie? You're the PLG kind of glory child. Making the transition to enterprise is no mean feat. What are the hardest parts?
Going back to one of the early questions you asked, I think it comes down to product go-to-market model alignment. Meaning, you can have a product that's amazing, for, let's say, individual users or small teams. And thankfully, Airtable was always built to be at least team capable from early on. But, let's just say like hypothetical product X. Product X is purely for individual usage. There's no team collaboration built in, at least from day one. And you get all this viral adoption or just all this top of funnel adoption for this product X. But, at some point when you try to go into enterprise, it becomes really tough to sell the value of X to a senior buyer within the enterprise if its value is only experienced by individuals, right? And then you have to do a productivity sale, which is to say, like, you go and you say, well, like every person that uses X gets 10% more productivity, right? Or say it's 2 hours a week or whatever it may be, or they like it. And you should pay more money for this, right? Or buy it for more people. And maybe that works. Although I think in increasingly in this environment where every enterprise is trying to rationalize their tool set, right? They don't want to have, a million different products. I mean, some enterprises I talked to, they literally have thousands of SaaS products and they're trying to consolidate down 50 different collaboration tools into 3, right? For good reason, right? It's easier then to develop internal know-how around that one product, right? Instead of having to support 20 different ones. And, you have one vendor relationship to manage, et cetera. I think, for product X, if you're coming in and if the value that you're selling is purely a function of, we have, X number of people who use us individually and there's no team or org-wide value that becomes more than the sum of its parts or that matters specifically to the executive buyer, I think that's going to be a really tough position to be in if you're trying to transition into the enterprise and especially, sold enterprise, right? Which, save for Atlassian, I think every great enterprise product eventually has to, be sold to a strategic buyer, right? In the enterprise, whether it's the head of IT for ServiceNow selling ITSM, or initially for Salesforce, head of sales, now head of support, et cetera. I think you have to find that senior buyer who really has a business case for adopting your technology.
Can I be a dick?
Yeah.
Everyone talks about. Well, true, but I'm a Brit, so I feel very uncomfortable asking quite direct questions. Everyone talks about like the bundling of a CFO purchasing decisions. How do you think about that? Would Airtable be a bundling or an unbundling? Like, would you be vulnerable to a Google Suite?
Yeah.
Or would it be in favor of you? I don't really know the answer there. And is it true that there is bundling happening?
So I think bundling is going to become really, it already is very important for products that fit into that core productivity suite. So if if you're a product that generally provides very horizontal, but in my mind, shallow value or commoditized value, meaning like there's a lot of different products that do the same thing, right? So certainly if you're doing video conferencing, there's, Zoom is great, but there's also other products that offer the same thing, whether it's Teams or Meet. There were many other products like Blue Jeans, et cetera, that predated, the current era of products. And I think For those products, or if you're doing whiteboarding, or if you're doing any kind of like free form or a very generalizable document editing, I think those products are screaming to be bundled, right? Because they're very broadly applicable. Every company wants some form of it. Maybe not for every employee. Like, does everybody need video conferencing? Yes. Does everybody need whiteboarding? Maybe, maybe not. Unclear to me, at least. But either way, you think of it as an aggregate decision that you make across the entire company, right? So the CIO can say, look, I'm going to go with Teams and not use Slack. I'm going to go with, Office, and I'm going to buy it all together as a bundle and not necessarily need every single specific product that otherwise would be unbundled, because the benefits of each of those products just are not that differentiated, right? Like, I need one big bundle. It's, it's really about finding simplicity and cost effectiveness. And if some of my users would have preferred XYZ, let's just say like document editing product instead of Word, too bad, because it's close enough and I don't hear of a strong enough argument for the business impact of using one or the other, right? I think that's different from making an ROI sale, which is by definition about differentiation, of saying this is not a commoditized product. But in fact, in our case, we're saying Airtable can uniquely solve these end-to-end process implementation problems, right? We are an app platform. We're a differentiated one in that we're much faster to build on and deploy than, say, a ServiceNow or a Power Apps. This is not spreadsheets. You're really building apps, right? And these apps actually create significant business value, whether it's, powering the content production ERP at, many of the top media companies out there, or powering end-to-end marketing supply chain use cases at really large marketing organizations, right? Some of the biggest brands or retailers out there. Those are use cases where, we actually are creating a lot of differentiation. We're creating real impact that we can quantify as, what is the value of being able to ship content faster with fewer mistakes, reuse more assets better. I mean, that's very, very high business ROI. Sometimes the cost of Airtable licenses is, of a very small percent of the business impact that we can have if we deliver on that end-to-end use case. So I think as we move up market, it allows us to fight the bundling effect by creating differentiated value that can be sold in a business ROI frame to a senior buyer.
When you're selling to enterprise today, to what extent do you lead with, hey, we have all these cool, sexy AI features that make Airtable great, versus we are a foundational tool that you will use and we have AI integrated?
So candidly, I've tried the former and it doesn't work. Well, there's a lot of excitement around AI in general. And maybe you'll get conversations that are just more exploratory in nature, right? I think there's plenty of enterprise buyers who, would love to just have like an informational conversation, like where they get educated on like AI capabilities, right? Especially if we have expertise around it. Interest and excitement alone don't close deals, right? A real business case, real justification of budget, of value, closes deals, right? And we're not in the business of just creating excitement and hype. We're in the business of, delivering real value and monetizing that value and building a business. So what I thought is, I think it can be a conversation opener in the sense that, if we come in and say, look, like, AI has the ability to disrupt, a lot of key pieces of this specific use case. Let's say that marketing and supply chain end-to-end process, right? Or it could be product operations, right? We talked about, collecting feedback, synthesizing insights from that, generating PRDs, helping with every stage of the end-to-end process of coming up with product ideas, executing on them, and tracking all of the above. So I think when we come in and we tease a point of view of how AI can specifically help in a certain use case, I think that's a lot more interesting and actionable than just talking about AI as this very abstract thing, because then we're back to square zero of enterprises are still trying to figure out what is this AI thing and what can we use it for. So we are nowhere near, in my opinion, the tornado of every enterprise just knows they want AI in heaps and is very ready to go and throw their own resources at deploying AI into every corner of the company, right? Maybe that'll happen. Maybe the train will arrive at some point, but it's my sense from my conversations that we're not close to that yet.
I think the hard thing for me is, I mean, a lot of AI companies, obviously, is my role as an investor, and they have these massive logos, your Walmarts, your Nestle's, your Coca-Colas, and you're like, wow, fuck. But truth be told, they're 2 seats in one department, in one office and actually it's 10K spent for these enterprises for them to test, see what it means nothing. I guess my question is, to what extent do I start taking those logos seriously?
In my mind, in my crash course on enterprise that I've gained over the past 10 years of doing the PLG thing and then shifting into an enterprise centric model, I think $1 million logo is really the threshold of being kind of a real enterprise account. Now, you could argue like there's a earlier stage milestone before that that's still meaningful. Like, I would think of even like 250K, 500K as a meaningful milestone. But the truth is, what I've come to appreciate is that anything less than $1 million is really a speck of spend for a really large enterprise, right? And frankly, if $1 million is just a starting point, I mean, you've got really large enterprise vendors like ServiceNow or Salesforce that literally are doing multi-deca million or even $100 million deals with some of their largest enterprises. And that's where you're really powering a really critical part of how the enterprise runs, right? To me, there's always a bigger fish, but at least the way my thinking is now, I think $1 million is kind of the real threshold at which you're at, you're a truly battle tested or significant value delivery enterprise vendor.
How long did it take you to get an $1 million ARR contract?
I think it happened fairly early for us. I think probably 2019, roughly. So maybe a year after we got our unicorn valuation. That was 4 years after launch, admittedly, and we had gotten a lot of PLG adoption. We were well in the mid to high tens of millions in revenue, I believe. Certainly, it wasn't like we got $1 million contract right away, and especially given the nature of how our product was adopted. Like, we got there because we had this groundswell of organic momentum within these larger enterprises. And by then, there were many Fortune 500s that already were using Airtable to the tune of thousands of active users who are easy to monetize.
Final one before we do a quick fire. I had Henry at Zoom Info on the show, and he said in the good times, everyone just renewed and put more seats on. Happy days. And
that sounds lovely.
And now not only are they not adding more seats because the teams aren't growing, but they're also wanting data to prove ROI, to prove usage, to prove value. And it's actually changing how he structures his teams because they have to be much more CS heavy in particular. Do you agree with that? And are you seeing the same?
We touched on the tool rationalization before, and I think it makes sense. I mean, in a way, it's interesting now, when you operate a company at scale, you start to realize how much macro plays into enterprise behavior and therefore your own execution behavior, right? When interest rates were low and every company was, going on a little bit of a binge of spending across the board, but including, software where, and maybe there was a rational argument for it during COVID. Every company had to digitize their workforce really quickly, shift into remote work, figure out how to enable their workforce to be effective, even when they weren't in office and they had to disrupt how they worked. So that, there was kind of this massive groundswell of adoption and just, dollars being thrown at a lot of different products, right? I think now there is a very understandable rationalization of, wait a second, we kind of had to go during the mad rush over the past few years of adopting tech, spending on tech, and also, less budget sensitivity. We adopted all these products, and now we're feeling, a little full. We've gorged ourselves, and we have to go in and understand what product is adding what value, which ones are duplicative, and which ones are actually meaningful. I need to say, I think the thinnest or the shallowest analysis that enterprises are doing is that active to usage, active to paid ratio calculation. So how many of our paid seats, if you have 100 paid seats, are we using 50 of these actively? And which departments do those occur in? Does this department really need XYZ product? So I think that is one of the analyses. But I think the harder work is actually saying, well, even if they're active or not, are we getting business ROI from this product, right? You could have, let's just say, a collaboration product or a chat product that has very high activity, and yet, maybe arguably is actually costing you in terms of productivity because everybody's just kind of going and using the product. But is it actually enabling real and better work results to get done, right? There's this funny quote I heard from one enterprise CIO, which was, look, if I added up all the supposed time savings that every collaboration product, claims, my employees would have negative hours of work to do every week, like save 5 hours with this tool, save 10, which save 5, it adds up to more than a full work week. So the math can't possibly be true, right? And so I think instead, the more that you can ground into business outcomes, and for us, that means when we talk about the product operations use case, we're really thinking about not just our teams using Airtable, but is it ultimately enabling product organizations to build and ship better products faster, with fewer mistakes and with better visibility? And what are the best measures for us to show that to the customer rather than just tell, right? So I do think it requires a different mode of thinking, especially from the early PLG collaboration and active usage only centric world, to how you do, kind of post-sales engagement.
Howie, I could talk to you all day, but I do want to move into a quick fire. So I'm going to say a short statement and you give me your immediate thoughts. Does that sound okay?
Yeah, let's do it.
So you're also an angel. You can put all of your money in one angel investment of yours. Which one do you put it in and why?
It is way too early to go all in on any one investment, especially in the frontier of AI, which is, personally what I'm very excited about. So I love the fact that, I can get involved with a lot of different really interesting founders and companies because I don't know who the big winners are going to be. It's still so early.
What's been your biggest lesson from angel investing?
I think it's that everything looks easier from the outside. When you're a startup founder, it can feel very lonely because you feel like, oh man, everything's so hard and there's so many things we have to figure out. I mean, you look at other companies and if you're only reading what they put out on, press releases and the big announcements and so on, everything looks like it's just so easy. And I think when you come to appreciate when you invest in companies and you're kind of plugged into the community, it's like everybody is, got challenges, right? Like it's never this perfectly smooth sailing the whole way at least, right? Maybe there are easier and harder phases, but I think I've just come to both empathize with every other founder going and figuring things out, especially from the early phases, but also normalize that experience for myself.
How did you get Fenton to write a Series C check? He's incredible, but he writes Series A checks.
I think we were at a very unique inflection point as Airtable and believed and still believe that there is a massive market ahead of us, right? And so, I think what really matters in venture is, what is the upside? What's the IRR potential for this investment? And, if you're in a market where the biggest you can ever be is, $100 million revenue business, right? And then you're going to plateau. It's hard to come in and get excited from an early stage returns profile standpoint. If you're already investing at, basically a valuation where that's priced in, maybe you get a 2x, 3x on it. When we raised that round, we were very much and still are at this early phase, this point of inflection where things were starting to work. We were starting to monetize. We were seeing a very quick ramp on the revenue growth curve. I think we went from 1 to 10 million in revenue in a little over a year. We were well on track to multiple tens of millions. And I think just the nature of the adoption, we had everyone from talent farmers to law firms to nonprofits to agencies, but also really large enterprises starting to adopt Airtable and paying for us. So it just felt like a very large TAM that could easily or could potentially have a 100x even from that point.
What's the biggest piece of startup advice that you hear that you think is bullshit?
It's this idea that, if you just find product market fit, all else is gravy, right? I think like product market fit is just the beginning, and there are so many more hard parts of building a business. Now, for sure, like you shouldn't have to worry about, like setting up, kind of every bit of like legal infrastructure before you found product market fit. I feel like there's this, mentality or myth that, the hardest part is that first phase where you're chasing product market fit. And once you see the takeoff trajectory, that's everything's a downhill battle from there. And in truth, at least in my experience, like that's when the real fun and learnings, but also the challenges really start to emerge, like to build a real business and to scale it.
What do you know now that you wish you'd known when you started?
I think it's really about thinking on longer time scales. We were always a very patient company. Airtable took 2.5 years to build the product before we even launched. But what I wish I had done more of was not only have that patience, be willing to think on 10-year long time horizons, but actually be more measured about holding ourselves to certain goals along each of the, at milestones along that way. So I remember, I don't know if this is true, completely true or not, but I remember, LinkedIn supposedly had put out a business plan before they started. I think Reid Hoffman had written this plan, and it had like MAU counts and revenue goals and just in full detail and in exactly the right chronological order. They spelled out, here's what we're going to be 5 years in. Here's what we're going to be 7 years in. It's like the MBA's dream of a business plan, where it sets like the next 10 years of growth expectation and product execution expectation in. And usually that never works, right? Like you when you try to predict the path of a company, it's like everything's volatile. You're not, there's so many things out of your control. But apparently in their case, it actually worked surprisingly well, right? Like they were able to hold themselves to it. So I think some of that is in a good way a self-fulfilling prophecy, where if you hold yourself to an expectation of, we have to be able to figure or get to this milestone by X date, right? If you're SpaceX or if you're Tesla getting off the ground, you can't just say, we'll figure it out when we figure it out, right? You're burning cash, you have limited time to get a product out the door, you have to make that product good enough to get sales, and then you have to follow that, in the case of Tesla, first product out with a second product that's not a loss leader. I think that kind of discipline could be applied more to even software companies. And so just holding yourself accountable to this longer term plan of, what is the sequencing, and at what point do you need to make that transition, for instance, from PLG to enterprise sold? What does that entail? What are the revenue milestones, et cetera, that you can hold yourself to?
Do you feel pressure about scaling into valuation? Your last valuation was 12 billion. It is high. Do you feel pressure to scale into that?
I feel pressure to drive durable growth in this business. I think valuations are always, an outcome metric, right? It's like it's the output metric that is a function of all of your execution efforts. And to some extent, if you focus too much on valuation, you're trying to chase the tail and not the dog, right? It's hard to directly impact valuation. I mean, maybe you can do a better job of pitching the company out there, and that helps. But I think the hard work that goes into building a great business takes a long time, right? Airtable at least was a company that, we spent a lot of time building our initial product before we even raised our first round. We then, spent a lot of time getting product market fit before we went and raised that unicorn round, right? This was not a let's go and get the valuation first and then justify the business after. We very much focused on trying to build a really great product and a business. And that's what we're doing now, right? I think to some extent, everybody has kind of, had a reset in terms of valuation expectations, revenue multiples, like what's normal in this new era. Certainly, if we do well at executing on the durable growth playbook, we figure out, how to sell differentiated value into the enterprise and do it repeatably. There will, for sure be a break-even point where we are worth our previous valuation and more. The great companies are the ones that durably compound. And no matter what the revenue multiple is, right? Revenue multiples can compress from 20x to 10x to 5x. Maybe they expand during certain phases. Like right now, we're seeing a bull market, especially around AI, related companies. But I think the one thing to focus on, which is in your control, whereas those multiples are not always, especially when they're driven by macro, I think it's really focusing on that durable growth. If you can consistently grow and efficiently grow, inevitably you will justify any valuation that you pick, right? It's just easier said than done.
Listen, dude, I want to do one final one, it's a very simple one. What would you like to be remembered for as a leader?
I think I care less about being remembered, and instead about doing a good job. Meaning, I care about our team as a constituency. I care about doing right on behalf of the company shareholders. Having a fiduciary and also like a moral duty to build a really good business and company. I think ultimately, what I've learned is there's much more to this than just building a product, right? It's fun and easy in some ways to build a good product. I think to build a great company, and one that is not only a great business, but also is a place where great things are built, are done. I think that's a very different challenge. And so I am learning to become a company builder. And while it's less about having a legacy attached to my name around that, I think it's something that I want. I hold a lot of both pride and accountability around getting good at.
Howie, listen, I've absolutely loved this. I always so enjoy our conversations. Thank you so much for putting up with my more direct style this time around, but I've loved it and you were fantastic.
Thank you for having me.